Hey guys, so last Wednesday I took a nice day trade on GU and we're gonna start on the high time frame as always. So as you can see, we are on the daily chart here on GBP USD, and we see that the market is in a nice supply level on the daily level, time frame. So we see the supply that ultimately led to the push lower on the daily, and you see that we have nicely mitigated this. Also on the 4 hour, very nice. We see that this was a strong, the origin of a strong down move. So this is where a lot of institutional orders should be resting. And we also have this 4 hour liquidity swept earlier in the day. And that was beautiful. Also, you can see that DXY, US dollar index, also basically retested this level here. So I would, even though it didn't go into the demand area, this is a valid retest, so a valid reversal area as well for DXY. So it would make sense for DXY to go up from here, at least for the rest of that day trading day. And so that was also a confluence that made the GU shorts idea stronger. Obviously, these two are inverted, so this was feeding each other, and I really liked it. Also, when we go to the low time frame, first we're gonna go to the low time frame. I don't want to confuse you too much, but on EU, I'm just gonna explain you some little extra bonus confluence that I had there. So we see that EU opened, London open, with a strong bearish move, and then we follow through with it later, and then we see this news liquidity sweeping this top and mitigating the top here of London. So I was thinking that London might hold this day on EU because this is a nice low time frame supply. We also have the supply area in overall on the high time frame on EU. So for me, it was making sense that EU might not come higher today. Okay. So this is another confluence. If I think that EU is gonna hold its London high, this is another confluence why I would think that GU also might go down, you know. So we have the DXY confluence, we have all the high time frame confluences. Everything is kind of in supply and DXY in demand. So beautiful, beautiful stuff. We see that GU, opposite to EU, did go higher than London and fully mitigated this 4 hour supply. And then we see something beautiful. We have the news impulse here, and then we re-sweep the news high, and we see how we start chopping, right? This is the market showing us that the buyers are running out of orders, or the market is running out of willing buyers, and the opposition of the sellers is getting stronger and stronger. So we can see we struggle to come higher, we swept the top of the news liquidity. We have the news liquidity bottom up for grabs, also session liquidity here, obviously. So I really was very keen on shorts, and we got it. We got our first break of structure below this structure point, close below it, nice fair value gap here. Then we get a mitigation, and you know I'm a 2-leg guy, so I'm waiting for my second leg. This is a super aggressive entry. If you do that all the time, you know, you could have done that here as well. You're gonna lose all day. So I want the second leg to confirm the flip of order flow, and that's what I got. So first leg mitigation, second leg beautiful high momentum order flow, and we get the close below all the structure here, and we stay down there. We are not shooting right away up after sweeping this inducement, which was great to see. Ultimately on the M15 as well, look how clean this looks on the M15. Nice fair value gap here, also M15 break of structure, change of character, closing below the previous structure. So this was just beautiful on all time frames. And you know how I am, I take very few trades, but the ones I take, they have like so much confluence. And this trade was just one more, you know. You see with these videos, they are all kind of the same, and that's why it's working. I'm not posting every day a video because I need so many confluences, and I got them all. Well, the market, there was like some, I think, unexpected news here, a little bit of volatility, but then the market made up its mind and, as expected, came for that news liquidity. And then it was down to how I'm gonna manage this trade. in hindsight, really, when I pressed the market execution button here, if I waited just 30 seconds more, I would have gotten my entry here, and I could have easily banked my 2 Rs here, but it wasn't meant to be. I clicked and I was instantly in drawdown. So it is what it is. We took the newest liquidity and this little inducement here, and I knew that this demand here could hold, so I was careful. I was close to managing here already, but I was gonna let it run a little more, and I thought maybe we get another impulse late in the session. But then I saw this candle, and that was enough for me. I didn't want the market to fuck around here forever, so I just closed it after this candle for 1 hour, and that was the trade. Now we can go a little more fast forward. So fast forward the next day. If I would have not managed this at all, first of all, with a break-even stop, it would have stopped me out here. Typical market, stops out your entry, and then absolutely melts. So the bias here was completely correct. This supply would lead to a push at least below this inducement level. And in hindsight, of course, I could have let that or play out or just hold it with full risk on, but do you really want to leave full risk on when you're up 1.55 R? If you lose, then you're gonna look like a retard, really. So I don't know, man. I was happy with just closing it for 1 hour. So what I wanted to tell you is about how to manage trades and why I hate break-evens. Break-evens you should take when your trade clearly doesn't work out and it's making horrible price action, and it just happens to give you a chance to get out at break-even. Then you can take a break-even. But if your trade looks super healthy and makes a correction and it looks like it's gonna continue down like here, you have to make a decision. Either you manage your stop depending on price action. For example, you could reduce your risk over this high, or you just let it play out completely. But what you should never do is, on a healthy trade, go break even, because the market doesn't care where your entry is. This is not a meaningful price level here. Yes, I mean, yes, for us to get into the trade, yes. But now what happens after our entry? We form a new supply here. So the entry price level is not meaningful at all after we are in the trade. And that's why so many people get stopped out for break even, because they just want to put their risk off, and they don't put any regard in if this is a meaningful price level or not. This is in the middle of a mitigation. If the market comes back here and mitigates the supply, there's a very high chance that it just taps you out break even, which is would have happened here, you know. So if you manage these trades, don't just go break even because you want to put your risk to exactly zero. Go, like, imagine the high being here. Then maybe you could go break even. You could justify that because you give the market room to induce this high here. Maybe, yes, okay, that. But if the market does something like this here, you should either not manage at all, or just take your profit where it is if you think it's too late, or you put your stop loss over this high, for example. But don't just go break even here when it's an obvious level that price should mitigate before it comes lower, you know, to finish that correction. It's correcting into that level, so why would you put your stop loss here? That's just a mistake that I see a lot, and this is just something I wanted to point out. And that's it, guys. Thank you for your attention, and I'll catch you in the next one. Take care, guys.